Big banks are once again engaging in the same kind of criminal behavior that led to the last economic meltdown. This is what happens when bankers don't get punished, when they don't go to prison for breaking the law. Joining me to talk about this is Farron Cousins from the Trial Lawyer magazine, and honestly, one of the best young political commentators, I think, in the business. I really do believe you are, Farron.
Well, thank you. I appreciate that.
You are. So pick up this story, would you?
Well, what we're finding out now is whistleblowers, of course, have come forward and say, listen, the bank I'm working at, and ProPublica has done a phenomenal job of tracking this, the bank I'm working at is doing the same thing they did back in 06, 07, and 08, which is using these mortgage-backed securities, overinflating their values, selling them to investors, knowing they're going to fail, and reaping a huge profit from it. Now, a lot of that, I'm sure a lot of people say, I don't understand most of those words you just said. So real quick, the mortgage-backed security, what that is, you get all these, the bank takes a bunch of different mortgages, puts them together in a bundle, and then it sells that bundle to an investor like a bond. And as people pay the mortgages, the people who've invested in that get paid. Now, if the people don't pay the mortgages, the investors have lost their money, but the bank made the
money up front.
Right.
So what's happening now is, we saw it with the housing industry last time. We had bankers, we had banks and bankers, credible banks, I mean, who used to be credible.
Right.
You know, they were just making stuff up. Somebody would come in and they would say, well, we know that you're only making $30,000 a year, but we want to put you in this $300,000 home. So they would just make stuff up. So they're doing it again. But this time they're doing it with commercial property, and they're bundling all this garbage up. This garbage, and garbage comes in, information that's garbage comes in, says that this investor can afford can afford this building. They know they can't. So actually, they're actually phoning up applications, aren't they?
Right. What the whistleblowers have said is that some of these applications, they're seeing the income of the person seeking the loan. The bank is forging it up to 30%. So if you were making $100,000 a year, the bank says, you know what, we're going to put down that you're making $130,000 a year because that's going to bump you up an income bracket. And now you're going to be, you qualify for this loan that we know you can't pay. And that's the kicker here. And again, as you mentioned, now they're doing it with the retail spaces, and retail is dying across the country.
Right. And it might, after this COVID pandemic, people are saying, do we really need brick and mortar?
Right.
Can't we work from home? I think it's going to take a big hit. The point is this, it's the same criminals doing the same criminal activity again. And what's the worst thing? The worst thing is that there's not been any reform at all for the credit rating agencies.
Right.
Why is that important?
Well, that's important because these credit rating agencies are the ones, they come in, they tell you whether or not this is worthwhile investment, if this is something that's even going to pay off, if this bank is even credible.
Yeah.
And because we haven't changed the way, it's all the same people doing the same things, working with one another.
Because they didn't go to prison.
Right, it's a criminal cartel.
The last time, the bankers didn't go to prison. And what I always found really weird about that story is during the S&L crisis, even Ronald Reagan put 800 bankers in prison. Okay, and so we had a Justice Department with Eric Holder who represented all of these people. Their law firm, Covington Burling, represents all these criminal thugs. So nobody went to prison.